pronounced, it is Oroco. My name is Adam Smith. I am a co-founder, VP of Business Development and Corporate Finance with Oroco Resource Corp. We're a Canadian company listed on the Toronto Stock Exchange. We're quoted as well on the Frankfurt and U.S. exchanges. Based in Vancouver, and we're developing something called the Santo Tomas copper project located in coastal northwest Mexico. I like this picture because this is a collage of some of our staff members. We have about 100 locals working for us in various roles. From these pictures depict people in the core shack, which is where we analyze and send off the drilling core for assaying. But we have locals working for us in the drilling, in the administration, in the scientific part, in the core shack, and a great many other roles. We're a very, very big part of the community, and that's a very important, very significant role for us. So I'll just go right into telling you what Oroco is. I'll leave the disclaimer and everything for the end. Canadian listed company formed in 2006 for the development of mineral properties in Mexico. Between 2006 and 2013, we developed, we drilled, we permitted, we acquired surface rights for something called the Cerro Prieto gold and silver mine in northern Sonora. We sold that in 2013 to focus on this project, the Santo Tomas project, which is a significantly larger one. We are just near the conclusion of a phase one drill program, 74 holes, 47,000 meters completed, the results of which are strongly corroborative of historical results at Santo Tomas, which delineated a multi-billion ton, multi-million pound contained copper resource. And to put the resource in context and to give you a sense of what type of mining project this is and how big it is, the contained copper at Santo Tomas is today worth somewhere between $30 and $50 billion. It is a porphyry copper deposit, which is the type of deposit that supplies most of the world's copper. These are the big assets in the mining business. They generate billions, tens of billions in many cases of revenue, and they do so over multiple decades. They are the big assets that carry mining companies across multiple commodity price cycles. And Santo Tomas ranks very highly among the list of porphyry copper deposits in the world. Santo Tomas is very well situated. It's, as I mentioned, coastal northwest Mexico. We're 160 kilometers to a deep water port. We're 10 to 20 kilometers to rail, high-pressure gas pipeline, the national electricity grid, etc. This location will provide the company with CapEx and OpEx advantages versus its peers. There's a very strong mining culture in Mexico. It is considered a tier one jurisdiction. It's the world's biggest producer of silver, 9th and 10th copper and gold respectively, 4th and 5th lead and zinc, and it's a leader in multiple other metals. Ownership rights are safeguarded by legislation in the national constitution, and the USMCA, U.S., Mexico, Canadian, otherwise known as NAFTA free trade agreement, protects ownership rights. NI 43-101 compliant mineral resource and preliminary economic assessment expected by the middle of this year. This is a major milestone for a mining company. It is a mineral reporting estimate compliant with current reporting standards. Santo Tomas was drilled in the 1990s, the 1980s, and the 1970s. By the mid-1990s, a historical mineral resource estimate had been created for Santo Tomas. There was 2.5 decades of legal title dispute that we were brought on to resolve, which we finally did in January of 2020, by which time that historical work had been dated, new mineral reporting standards were introduced, and the historical report, as is detailed here, is considered no longer compliant, not to be relied upon, et cetera, et cetera. However, the methods that were used in calculating that resource are largely the same as would be done today. We believe the sources to be reliable, and the work that we've done has largely recreated and expanded upon that historical work. We've raised over $50 million in the last 2.5 years since the full final legal title resolution. We've put that largely into the ground with that 47,000 meters of drilling, and we're well funded for the completion of the current technical program. Copper. I've got some slides later on that talk about copper, but it's very, very significant that we're in copper. Copper is the right metal, the right time, as I say there. The reason being is that copper is the metal essential to the energy transition and decarbonization. The world has gone from using approximately 500,000 tons of copper per year to 25 million tons today. That's somewhere between $220 and $230 billion of annual turnover in the copper market. That is expected to double and triple as we try to achieve our decarbonization goals. There is no other single metal. In fact, the amount of investment required to meet our needs in copper going forward exceeds the amount of investment in all other metals combined. Closing in on $1 trillion for all metals, $700 billion will be required in the next generation to meet our copper needs. There's rising demand, dramatically reduced levels of discovery in the copper market. In fact, the type of copper assets that supply our world with copper right now were largely discovered up to the 1990s. From the 1990s until today, the decline of copper discoveries has been dramatic, to the point where the type of discoveries that were made routinely, multiple per year in the 1990s, have not been made in a single year for the last 5. So we're definitely at that point where the easy copper has been found, the more difficult copper has been found, and the really much more difficult copper is all that's remaining in terms of new discoveries. What that means for a company like us, as we build Santo Tomas, as we publish compliant resources, we are going to start to be looked at by the world's leading mining companies, the world's big companies like Anglo, BHP, Teck, etc., who are looking themselves at declining assets, leading to circumstances where they're not going to be able to meet their copper production targets. Their rate of discovery, the majors' rates of discovery, have fallen dramatically, and they will therefore need to engage in M&A. They'll need to acquire what they can't find. So a little bit about our location. Coastal northwest Mexico, just to put it in context, this is the Baja Peninsula here. The California border is about 500 kilometers north of our project. This is the Sea of Cortez. The project in the red box up there is about 160 kilometers to the port of Topolobampo. The region between Topolobampo and our property is called La Entrada al Pacifico. So we've got rail, power, natural gas pipeline, high-pressure pipeline that comes from Texas, a deep-water port, and the region itself has been designated as a multimodal trade and transportation link. So it's the type of region where you'd expect big infrastructure projects like Santo Tomas. Mexico, as I mentioned earlier, Tier 1 mining jurisdiction. Mexicans see themselves as miners. It's a very, very strong part of their national identity. And for our benefit, I think, for the project's benefit, will be all this infrastructure that will lead to CapEx and OpEx advantages. As a comparison, some of the other, and there's a very, very few other big copper deposits, I can count them on 2 hands right now, owned by junior mining companies that would be comparable to Santo Tomas. A good many of those sit up at 4,000, 5,000 plus meters in the Andes. They sit hundreds of miles from any trade or transportation links. Northern British Columbia, for instance, which hosts a couple of those deposits, you're 800 kilometers from Vancouver. You're multiple hundreds of kilometers from deep water ports, and you're well into the Canadian wilderness. So this is what Santo Tomas was defined as up to 1994. 7.7 billion pounds of contained copper, a robust drill program. We have all the data from that drill program. We've been able to review some of the drill core, and it has turned out to be, based on our drill program, a very reliable report. A pre-feasibility study is one level below a bankable feasibility study, which is what you'd be required to produce in order to build a mine. So it's a very high level, very reliable report, which studied Santo Tomas for the production of 125,000 tons of copper per annum. To put that in perspective, in today's dollars, that's about 1.1 billion in revenue annually. And Santo Tomas's resource is capable of carrying that for almost 30 years. To put this in comparison to, say, a gold project. Gold projects, in order to meet the highest, to be considered Tier 1, would produce about 100,000 ounces or more of gold per year. That's a little under $200 million in annual revenue versus the annual revenue here of well over $1 billion. So this is a big Tier 1 asset of the type that the world's biggest mining companies covet. One of the conclusions that Bateman Engineering came to in that report was that Santo Tomas is likely to increase in grade and tonnage with additional exploration. And I can say the results of our drill program are certainly proving that to be true. And this slide, I think, demonstrates that. Here's the historical drilling at Santo Tomas. You can see relatively shallow, limited number of holes versus considerably more holes drilled by ourselves over the last 24 months. We have found mineralization down to a depth of 300 meters versus 700 meters versus 350 meters in the historical program. We've tested 5 kilometers of length of the geological structure versus 3.5 kilometers tested in the past. And we've increased the widths. We've found new zones. We've done everything that you would expect to do when you go back and re-drill a project like this, but do it more thoroughly. So that study in 1994 and the resource that resulted in it and the annual production that was then forecast looks to be very reliable. It looks to be conservative. And in the coming months, we will be producing the first NI 43-101 compliant resource using the data that we've generated over the last 2 years. This is one of 3 different camps that we've built there. I mentioned earlier our very important role in the community. One of the aspects of that role is the building of infrastructure, the type of infrastructure that supports both an exploration program of the tenor that we've done, as well as future activities leading to the construction of a mine at Santo Tomas. We've got 3 camps. We can house over 100 workers. We've rebuilt the road network. We have a river transportation system. We have a state-of-the-art facility nearer to the main town in the area where we store and analyze our drill core. So the project has a very robust infrastructure that would, I think, upon a decision to put a mine in here, to build a mine at Santo Tomas, would be utilized by whoever builds that mine. And a little bit about the timing. One of the reasons why I'm on the road speaking to investors is because Oroco is about to transition to a period that we think is very important from an investor's perspective. First, we spent 10 years assembling the land at Santo Tomas. The heart of that process was a legal battle fought in 5 different jurisdictions. We won in January 2020, but for that decade, this was a very boring company. The stock was trading in the pennies. Nobody wanted to invest in a lawsuit. From January 2020 until today, we've conducted the kind of activities that investors can get their head around and the world of mining analysts can understand. We've executed an exploration program. We've drilled a lot of meters. We've made a lot of announcements about results. That has generated a lot of interest among investors. Our company went from being valued in the few tens or the few million into a company that at one point reached a valuation of 700 million Canadian. It's currently 160 million Canadian. I think investors got a little ahead of themselves. They relied upon the historical data at Santo Tomas, considered it a current resource. The market got very excited about copper in general, so we reached share prices that were unsustainable. But now that we're about to announce the results of the drill program, first the mineral resource estimate, and ultimately a preliminary economic assessment, we're at that phase where companies like ours get re-rated. We go from an exploration company with a group of interesting drill holes to a company with a resource. And if that resource resembles the historical multi-million ton, multi-billion pound contained copper resource, then there certainly is a potential re-rating. There's a number of metrics for the valuation of copper companies like ourselves. A London firm called RFC Ambrian has done some excellent work. I can share that with you if you get in touch with me. But the important thing for us this year is we're finally going to reach that point where it's not just a collection of drill results, but it is a mineral resource estimate. And that provides the market with methods of valuing us. So a little bit about copper, because copper is, in fact, a very exciting metal. In fact, I'll skip ahead here and get right to the heart of it. Goldman Sachs declared copper the new oil because of copper's central role in the new energy environment. Copper is the largest, the most important commodity in terms of generation of electricity using renewable methods and non-fossil fuel methods. It is the way that that energy is transmitted to the end user, and it is the way that the end user uses that energy to turn it into kinetic energy, like in the motor of an electric car, heat, et cetera, et cetera. So copper is, as I've said earlier, the most important commodity in the energy transition. The energy transition, which is, as this slide, well underway right now. That wouldn't be interesting for investors if the world was awash with copper, but in fact, the world is not. The copper inventories just fell below their 5-year lows this week. The number of copper projects in the pipeline to be put in production to meet needs is at historic lows. The rate of discovery of new copper assets has dropped to virtually zero. And the world's largest sources of copper right now are, by and large, aging big assets. North of us is the Cananea deposit in Sonora State, Mexico. It will produce about $4.5 billion in revenues this year, and it's been operating for 100 years. There's a great many similar, maybe not 100 years old, but a great many aging copper assets in the world. Production from those assets is expected to decline quite precipitously over the next decade, and there quite simply are not enough new copper projects, copper deposits on deck to meet future demands. So when supply limitations meet demand increases, you get increases in prices, which is why the copper market is so interesting for investors right now. Goldman Sachs predicts that copper is necessarily on a path to 15,000 a ton versus 9,000 a ton today. They say we need copper prices at those levels to incentivize new production to come anywhere close to meeting demand. Another interesting copper stat is that we will use more copper over the next generation than we have in all of industrial history. Where it's going to come from is a very good question. So if I take $15,000 copper and I plug it into, for instance, a discounted cash flow model for mines like Santo Tomas, the valuations become quite astounding. Some very smart guys in London and Perth, Australia, looked at the copper landscape in 2018, and the analysts at RFC Ambrian declared that potential acquisitors of copper assets are in better financial shape than they've been for a long time. The balance sheets of major mining companies, which have been damaged from declining metal prices from 2010 onwards, were in fact fixing their balance sheets. What was true in 2018 is even more true today. We've had another 4 or 5 years of very robust metal markets. The project pipeline for these companies is diminished, and a number of them will therefore have to engage in M&A in the near term. Yet, when you look at what assets there might be for these companies to buy, what copper assets, large copper assets, they define that as in excess of 3 million tons contained copper. They believed as of 2018 that there were just 5 candidates. And copper deficits, for instance, by the end of this decade are expected to be 5 to 8 million tons per year, which would represent 40 to 65 assets like Santo Tomas. So when you're limited to you're a big mining company and you're limited to 5, there might be 8 today because of some advances at certain projects. Yet we're in a world where we need multiples of that. There really is only one way for that equation to end. And as they state here, this lack of opportunity looks set to raise the stakes for those assets that are available. RFC Ambrian, following the legal resolution and rolling of the asset into Oroco, Ambrian looked at our asset. They looked at the valuation metrics that they had used in this report, and they made some predictions as to the potential value of Santo Tomas in an M&A transaction. I don't have those values here. Compliance would suggest that I can't talk about future share prices, but again, I'd be very happy to share this report with you if you're in touch with me. But suffice it to say that assets like this tend to trade in the billions. Our prior valuation of $700 million was an indication of just what numbers were contained in this report. Since that time, since the publication of this report, we've announced considerable additional drill results. We've expanded Santo Tomas. We've got to the point where we're on the verge of a compliant resource, and the first mine plan contained in a preliminary economic assessment, at which point I think there's sufficient information out there for potential buyers to start to value this asset for the purpose of acquisition. As a company, we have been meeting with other mining companies, with major mining companies. There's lots of opportunities to do that. We are starting to get the sense that we're on their radar, that they're aware of what we're doing, and that they're looking forward to these results as much as we are. I will not read the disclaimer. I think if everyone had to read the disclaimers, we'd be here. We'd be here all night. Yes, thank you. And with that, just a little bit about the company. As I mentioned earlier, founded in 2006. We sold our first asset in 2013 after successfully developing it. The founders, Craig Dial, myself, and in-house counsel David Rose, continue to work very closely with the company. We've added Richard Locke as CEO and director. Richard has a lifetime of experience in the mining industry, most recently with Arizona Metals, a company that was similar to us, developing a big base metal asset. It was bought by South32, an Australian entity, for approximately $1.4 billion US 2 years ago. We've spent a couple of years, really since that time, we've been courting Richard. He sees in our company, or he saw in our company, the potential for that same type of exit through sale to a major. So he joined us at the beginning of last year, and he's helped guide us to the conclusion of the first phase of drilling and the preliminary economic assessment. Ian Graham, president and director, again, also lifetime with major mining companies. Ian's on the ground in Mexico making the program happen. And just as I was preparing for this event today, I realized Dial, Locke, Graham, McGuigan, and of course with the name Adam Smith, you can tell that we've got quite a few connections to Scotland. So thank you very much. Thank you to the wonderful people at AJ Bell for organizing this. Ta believe, which I believe is thank you, mispronounced. So thank you so much.
Tthank you very much, Adam. Yeah, by all means. We've got a few minutes for questions, so have we got any questions in the room? One at the back here.
From the sound of things, you're dependent on the big operator coming in to actually finance the operation of it as a mine. That seems to be your game playing.
That would be our preferable way forward. But given the paucity of big copper projects out there, given the number of companies that need these assets, I think there's a number of ways forward for us. We could always develop this in conjunction with a partner, and we will take this as far forward as we need to. But it's worth noting that if you look at the last 30 years of copper discoveries and development of projects similar to ours, virtually every project, except for a small handful, that are this big, that have reached this certain stage of advancement in terms of drilling and studying, that are in a good jurisdiction and have a clear line of sight, have good infrastructure and have a clear line of sight to development, every one of those assets has been bought by a major mining company. So it seems once you rise to a certain point of confidence in the asset, an acquisition does take place. That's evidenced by the paucity of companies out there that meet all those conditions that have not yet been bought. But there are other options for us. As copper prices rise, I think the number of options will increase. But a sale would seem to be the preferred way out. M&A in the mining sector has already started to perk up quite a bit. We've seen some transactions take place. Mining companies are now openly talking about the need to acquire assets, whereas for most of the last decade they were talking about being conservative and returning money to shareholders. Now that situation is reversed, where shareholders are telling mining companies to put the capital to better use. Mining companies are responding. CEOs, boards of directors are now talking about the need to make acquisitions.
Great. I think we've got time for one more question. So.
Yes, just thinking all the sorry, that's right. Sorry. Given all the all the renewable energy that we can think of requires copper, And the bleak picture you've just drawn just now about the future of copper, given it's about to disappear, what's the future for the energy?
That's glad you picked up on that. More recently, as the predictions for future copper needs come into focus and the understanding of the paucity of copper assets, there have been a number of commentators talk about the possibility that we may not have enough copper and other critical metals to meet those needs. So we'll find out in the future, but for the time being, I think the picture for copper and other metals is quite clearly that they will rise in price, that price will incentivize new production to the benefit of companies like Oroco.
Excellent. We'll leave it there. Time's up, but thank you very much for that.
Thank you, Tom.
Thank you.